You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. This is, of course, everyone's favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of unusual activity, a sprinkle, a dash of education, throw in a splashing of the Viceroy, and you have indeed the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as from this here ever-expanding, ever-exciting Options Insider Radio Network. A lot of new stuff coming down the pike for you guys. Stay tuned to wherever you find our programming: iTunes, Stitcher, AHA Mobile, TuneIn Pro, our mobile app, and, of course, theoptionsinsider.com. All of those locations will have all sorts of fun new content heading your way very shortly. And joining me on the old program today, starting off, beaming in from the headquarters of Options Express by Charles Schwab. You know him, you love him as the Viceroy, none other than Mr. Alex Jacobson from Options Express. Mr. Viceroy, welcome back to the show, sir.
Hey, Mark. Good to be here today. We were busier than the market looked today, so good day over here at OX.
I guess that's a good thing, right? When you're busier than the market looks, always a good thing. The market can be deceiving. What is not deceiving, though, sir, and listeners, this is one of the few times that I wish we had a video podcast as opposed to just a radio program, because we had a great and eagle-eyed listener sent us in on our site there a photo, a historic photo, if you will, that is currently being auctioned off on eBay of none other than the Viceroy himself. I would say circa about 20-odd years ago, teaching up them options over there at the Options Institute. It was so long ago, there's not even a chalkboard, there's no whiteboard there. It's just him writing on a big flipping notepad. So interesting stuff. But Mr. Viceroy, I love it when our listeners dig up this cool stuff.
Yeah, that was day 3. We used to do a 3-day at the Institute, and day 3 was called Managing the Product, and it was all post-trade decision-making. So the flip chart was something I actually used over and over again. But that picture was posed, and it was the next Monday, it was on the cover of the Chicago Tribune business section. And then I was a celebrity for about 6 hours. Then I went home and was reminded to take out the garbage. So a moment of fame.
Was I right that this was a full 80s time frame? You got the Gordon Gekko suspenders going and everything here, Alex.
Yeah, that was my look at SIBO. Yeah, that's late 80s, maybe early 90s. But somewhere in the neighborhood of 20 years and 100 pounds ago.
Well, listeners, you can check it out for yourself. If you head on over to eBay, you too can bid on this rarefied piece of history. I believe we also have a link up on our Facebook page, facebook.com/theoptionsinsider. So you too can see the Viceroy in all of his glory. Meanwhile, we are also joined by the Rock Lobster himself, beaming in from the great state, nay principality, nay duchy known as Maine. Mr. Rock Lobster, welcome back to the program, sir.
I was just enjoying the picture of Alex in his speltness, although no hat.
Yes, but, no fancy hat there. Something is missing from that picture.
There was no fancy hat, and it was the time before grease boards. So all he had was paper and a big pen.
I should credit the eagle-eyed listener who sent that in to us. That was Paul Berger. So there you go, Paul, finding all sorts of interesting treasure troves on eBay, as you were wont to do over there. All right, and last but certainly not least, we are also joined by Mr. Uncle Mike Tusaw from RCM Asset Management, RCM Wealth Advisors. Uncle Mike, welcome back to the show, sir.
Always good to be here. And I think that picture, since he wasn't wearing a hat, that must have been before he was promoted to the Viceroy. That's how long ago it must have been. That's
true. You know, he didn't reach Viceroy status till he came upon the rarefied air known as the Options Insider Radio Network. And once you come on this show, or any show on our network, you do get a bit of a title bump. That's just how it works. Alex skipped a few titles in between, went straight to Viceroy, but it's still not a bad road. All right, and with the team assembled and our fine historic pictures well in hand, it's time to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, listeners, as Alex alluded to, it wasn't the most exciting high movement day on the old street, but there still was some action cooking out there, so perhaps we'll dive into those hinterlands, see what caught our collective eye here on the old program. Alex, since you had the great picture and all the other fun stuff going today, perhaps we'll start with you. What in particular caught your eye in today's activity? Before we do that, listeners, I should remind you, if you're playing the home game, we are recording this on Monday, August 11th. You'll be hearing it on Tuesday, the 12th, or whenever you tune into our fine programming after the fact.
So the day started out actually kind of meh. And Priceline was the story this morning, and the earnings came out, and the stock was down about 30 points, 25 points or so. And the early prints in almost all the momentum stocks, with the exception of Apple, were all lower. And within about an hour, everything had turned around and was running higher. I think Priceline traded a $60 range today, but I think it closed near the high, and a couple other the momentum names, LinkedIn, which has been really a powerful momentum name lately. I mean, when they're buying momentum, it moves. LinkedIn, Tesla have been the money flows for momentum, and they both ended up having great days. But it was a reversal off the opening. The broader averages did just the opposite. The broader average were stronger in the morning, and then kind of petered out in the afternoon. So from an option trader standpoint, there was plenty of stuff to do today because pretty much everything was trading. So from the trader standpoint, it was a good day.
Priceline, of course, reporting earnings before the bell today, listeners, so we don't get the fun of talking about it live as the numbers are coming out. But it was a bit of a banner day for Priceline, closing today up nearly 30 handles, 28 roughly, about 2.25% to 13.09 on the day. Yes, I said that right, listeners. That's $1,309. So a banner day for Priceline. This is the name that's doing about 40,000 odd contracts a day, doing nearly 70 today. So fairly decent. Nothing exploding off the charts here, but fairly decent nonetheless. Mr. Andrew, what caught your eye in today's activity? I know on our last program you were calling for a bit of mixing it up in the old Middle East to perhaps sort things out and get the market back on track. And we saw some of that mixing it up, and the market started to move that way. There was a little bit of hemming and hawing, a little bit of odd times, but still nonetheless, your call did come to fruition. So perhaps some good feelings over there at the pit today.
There was, it was a good day for, good day for me. For us, I would have liked to have been a little more short vol than we was. I'm like sitting there talking, and I just realized I should have been trimming some of my long Vega, but it was okay. But on Friday, you had I kind of had that feeling once I put it up in our blog, once the U.S. starts bombing some targets, bombing the bad guys, it generally, stocks like it. They like certainty, and usually the U.S. Air Force is they're a pretty good bet historically. So it was good to see a little bit of stability, maybe coming back into that region, and I think it's a long overdue, and I think the market in general will like it. It's just got to be. I think we have seen much harder rallies and much larger drops in volatility than we had, although it's down, a pretty fair amount. We closed 1575 and we were down $1.50. So that's a good move in volatility for sure. That took kind of that premium. It took sort of that panic premium out of the market. So can't complain about the move. And, I think based on how we see the move, you'll probably see incremental drops in volatility. I don't know if we're going to get that power move that we got today. It was actually down quite a bit this morning, and then kind of like Alex said, those indexes reversed. But if they kind of continue the script, I would say vol goes a little lower. The Russian stock market was a little higher today. So, it seems that a little corner's been turned, but it'll probably take a couple of weeks for more of it to play out. But it's looking better because we sure don't have any economic news to lean on for a couple of months anyway. So that's what we got.
Well, you're not waiting with bated breath for Cisco. Oh wait, I said it out loud again. I'm sorry, Uncle Mike. I shouldn't rub salt in the wound like that.
What a segue.
All right, but it is your turn at bat, Uncle Mike. So aside from the growing apprehension over the looming Cisco earnings, what else caught your eye? A little bit of a mixed bag for you today. Gold roughly unched down a little bit. Apple up pretty strongly. So not a bad day overall for the Tucson team.
No, not at all. And, just so for all of you listeners out there, make sure that you never mention any bad trades with which you make on this show, because they will never let them go. So with that in mind, yeah, today it was kind of, I'd like to see a little bit more of a down day before I start selling some more of my beloved puts. I went into the weekend flat. It was one of those ones to where I had to take profits on a bunch of them, and so went into the weekend flat. And then obviously with the market going up like it was today, I was actually considering selling some upside call premium in some way, shape, or form, but there was just nothing there that could. That I felt justified in doing so, and this is on SPY, of course. So really didn't have a lot of action today, but nonetheless, we're higher than we were on Friday, which is a good thing.
Speaking of higher than we were, last time we all gathered around, we were all teasing Andrew last time about his love for Zynga, and Zynga was selling off pretty aggressively going to earnings. Seems to have rallied back a little bit, got up to back at about 290, almost unched from the lows that it was trading. Remember, we were talking about how it was trading right at the apex there of the straddle, exactly as it was priced in for earnings. Since has rallied back quite a bit, hovering just shy of the 3 handle now, about 285 right now. So perhaps the end is not nigh for your dearly beloved Zynga there, Mr. Rock Lobster.
I don't know. If look at this Candy Crush and all these other companies, can make up games, Angry Birds and stuff like that. Why can't Zynga? But they're still. I think it's a kind of it feels like they're a year into the recovery process. How long did it take them to fix Hewlett Packard? It's still kind of a little shaky, but the company at least has some revenues. I don't know if, like I said, it's not as much fun as it used to be as a stock for me. So it's there, and it was fun when they had the potential to do real money gambling. But right now it's just sort of sitting there.
I was gonna say, did they ever actually fix Hewlett Packard? I must have missed that news release.
No, they didn't. That's the whole point. They have not fixed Hewlett Packard.
After they bought Compaq, it's kind of just been downhill from there. I never really saw the logic of that, and apparently no one else did either, except the companies that were involved in that. All right, enough ancient history in the tech land. It's time to dig into some current events in the options land. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is the portion of the show where we dive into the wild side of the world of options, let you know which unusual activity alerts are catching our eye over here at theoptionsinsider.com. We're going to kick things off today with a name we haven't checked in on in quite a while. This is Yahoo, ticker symbol YHOO, closing today $35.79, down roughly about a dime or so on the day. Not a heck of a lot of movement going on. And not a banner day from a volume perspective either. This is a name that averages about $1.25, 125,000 or so contracts on any given day, just doing a hair shy of 100,000 today. So relatively light from a volume day, and that wasn't really what caught our eye. The net contracts moving isn't what garnered our attention. It was some of the trades going on within there. In particular, a relatively, I wouldn't say sizable, but interesting diagonal put spread going up out here in good old YHOO. In particular, we profiled on the old optionsinsider.com the Yahoo SEP 12 weekly, SEP 34, just straight up regular monthly SEP there. Diagonal put spread going up for 9 cents, went up 1,000 times. When we profiled it, it went up in 2 blocks at the time. It was, like I said, a diagonal put spread. They're buying the little bit more out of the money puts and then selling your nearer term, your weekly put there to finance the whole transaction. Not a lot of open interest on the weeklies, but 20,000 on the regular SEP block. So a bit of an interesting trade. Yahoo hasn't been doing that great of late, but it has been a little bit north of the 34 handle. Looks like someone here coming in to close and then roll out a little bit more to perhaps take a little bit more aggressive position out here in Yahoo. They've been making some headlines of late. They're resurrecting old TV shows to bring onto the Yahoo platform and doing a lot of other interesting things. Yahoo has always had this kind of cross identity as both a internet company and a media company. They even brought in an old studio head to run it at one point. So it's a bit of a bifurcated company, and they're still dealing with the legacy and the issues as a result of that. But still, interesting paper going up out here in Yahoo. We'll have to check the open interest tomorrow to see exactly what was cooking. Mr. Rock Lobster, what's your take on this Yahoo paper? And you know, it's a requirement. If Sebastian were here and I tossed to him on Yahoo, we'd of course hear his Yahoo yell. So you need to do your best Yahoo yodel before we dive into the paper.
Yahoo!
Not bad. Not bad. You gave it the old college try. I'll give you a C+, B-. Not bad. Not bad at all, sir. You can pass with that.
I think what this is kind of a smart trade, even though the volatility curve skew is bad on it. It's a smart trade because the trader's trying to buy the SEP 34 puts, and then he's selling the 4.5 puts in the forward weekly against it. So Yahoo kind of keeps bouncing off this 33, 34 level because of the Alibaba IPO. So they figured, the idea being, those 4.5 puts near term are going to go out worthless, and they're going to be left with the 34 puts, which are probably going to be worth a whole lot more than 9 cents come earnings. So I think it's kind of a smart earnings play, mostly just kind of banking on the fact that Yahoo has had a hard time, really selling off ahead of that news. I'm sorry, I misspoke. It's not the earnings they're buying the SEP paper for. I think it's the Alibaba IPO. I'm always get those two confused with this one right now. So, but the SEP is bid in the 40s, and that SEP farther term and the near term SEP is just in the high 30s. So there's a little bit of a bid for the volatility, around this potential IPO date. And I think the trader's just getting some very cheap options. And to be honest, I like this trade, and I'm going to look at it tomorrow for our strategy letter. I think it's a great idea.
There you go. The great steal, right? Isn't that the appropriating to steal the Steve Jobs phrase? Good artist copy, great artist steal, something along those lines. There you go, sir. Always
Works
good to steal.
Picasso.
Yeah, exactly.
He stole.
And you're right. When you're talking Yahoo, you're always talking pretty much Alibaba. That's pretty much the only thing they have that makes any money. at this point. That very, very prescient stake they took in Alibaba really serving them well when the rest of their business kind of flagging these days. All right, speaking of businesses that are flagging, we're moving on to a buggy whip manufacturer, a.k.a. watchmaker. This is FOSL. Of course, the watchmaker is the ticker symbol FOSL. The ticker symbol closing today 103.21, down about $1 and change, or a little over 1%. This is the name that does have earnings cooking tomorrow, so we're seeing some interesting activity as a result. This is the name that does about 2,000 contracts a day, so odd block perspective, not too bad, not too shabby, about 10x our average name on this segment of the show. Doing about 17,000 going into earnings tomorrow. And what we saw, again, this is kind of we like to have narratives on the odd block. Today's narrative is weird diagonals and ratios and all sorts of funky rolls and stuff like that. In particular, this is the guy coming in to straight up spec on earnings, but he didn't just buy some upside calls. Remember, they closed today 103.21. He came in and bought the 109, so those are indeed some upside. But then he turned around and did it 1 by 3. He sold the 115s 3 times, all for a net of a dime. He did it a total of 250 by 750. So not the biggest trade in the world, but still an interesting little spec. Of course, this is very, very near-term stuff. The earnings coming out very soon, and not a lot of time for this trade to play out. But we like it. We like to talk about things that are a little bit more nuanced here on this show. We could clearly fill the whole odd block and indeed the whole hour with talk of people gobbling up upside calls. And we do those every now and then. Obviously, there's still some interest in those. If someone's very well-timed, appears to be very prescient in their analysis, we'll certainly light those up as well. But every now and then, we like to look for something a little bit different. And here's somebody doing a little bit of the old 1 by 2, or in this case, 1 by 3, to finance his call buy. What's your take here, Mr. Rock Lobster, on this 1 by 3 ratio spread in FOSL?
There was tons of spreads in August. I think everybody was trying to get real clever with the volatility and whatnot in here. I thought it was an interesting spread. I think FOSL has the potential to move $10 to be like trade 113 without too much trouble. So I think it's basically a low cost of entry type trade. There are it looks like a lot of kind of buying sort of the near term, like buying a lot of the 109s. There's a lot of open interest on the 109s. I'm sorry, a lot of volume. It looked like a lot of buying, at least the big blocks, and then selling some spreads against it. So the paper feels, at least they're kind of looking like a decent move higher. That's how I see this. Looking for a decent move higher. They don't want to spend a lot of money on it.
You're right. There is a lot of paper here on this 109 strike. Only 7 contracts open, but nearly 6,000 going up today. So apparently 109 is the strike du jour. Whether a newsletter picked it, this is a little sizable for a newsletter. I don't know, but interesting stuff. Someone, perhaps we picked the savviest of the bunch, deciding to spread some of that off. The rest maybe being outright buys. Either way, $1.55 to $1.85 where they went out. That's a pretty pricey premium. Say that 3 times fast for essentially a weekly option at this point. Just a few days to go. So yeah, you're right. These people obviously betting the farm on a pretty aggressive move in FOSL, which I don't know how I feel about that from a fundamental perspective. I know you're a diehard fundamentalist there, Andrew. But FOSL, all these legacy watchmakers with things like the iWatch and the Moto 360 and the Google smartwatches and everything on the horizon. How much love is there for a standalone piece of, mechanized clockworks on your wrist there to tell you the time? And FOSL, I know, has had some forays into smartwatch in the past, way back in the day with Microsoft and stuff. Hasn't really worked out that well. I believe they even spun off a division at one point to do that. So this is clearly just pure watch territory. Who knows how much upside is left for that? But c'est la vie. Apparently the rest of the market disagrees with me. People loading up on those 109s. We'll pay attention to those, listeners. Maybe we'll check in again at the end of the week to see how those calls are faring. And now we're going to roll on into our final name. This is ITB, the iShares Dow Jones US Home Construction ETF. Say that 5 times fast, closing at $22.76, roughly unched on the day. This is the name that does, a whopping, that's not bad, about 5,500 contracts on a given day, doing nearly 3x that, about 14,000 on the old day. And what we saw, again, keeping with the narrative, the theme of today's program, a little bit of a roll-in, a little bit of moving across the expiry chain. In particular, we saw the AUG 22, SEP 22 roll going up on a bit of a ratio. We saw it going up 7,800 times on the AUG side by 5,031 times on the SEP side for a net of 45 cents. Looks like paper was buying SEP, selling AUG. Usually that's why you see those bit of a ratios coming out that way. They want to do it on some sort of keep their premium as close to even as possible, which is why they're buying fewer of the pricier contracts. Open interest, no surprise, 7,800 on the AUGs, 200 on the SEP, so clearly open paper. Clearly this is a roll going up here. Went up about 3 cents over parity, and here's somebody coming in, lifting the offer on those SEP calls, so clearly he wants to get done. This is that time of the month where people are rolling out of AUG, taking their AUG positions that aren't really working, or perhaps need a little bit more time to bake in the oven, rolling them on out. This guy clearly doing the same thing, not even rolling up, just rolling straight on out to keep those deltas in his back pocket. Senior Rock Lobster, take us home on this roll out but not up here in ITB.
Actually, this was one of the savvier trades, because I tried. I actually think I found the day they put on the August 22 buy. It was looked like July 30th. They got it. They scooped the options, I think, for around 50 cents or something like that. And I think they're getting a good, so they're running out of time, obviously, with August, and then they're rolling into SEP. So I think their timing was pretty good. This might be somebody to watch, especially when they're this good at the bottom or the near-term bottom for ITB. As I recall, I think that was the near-term low, July 30th. I'm pretty sure. And they want to keep a good thing going. They're just running out of time. They're running out of time with the cycle they have, and they're looking to get back in. So more power to them is all I can say.
Yeah, we love these guys who are a little bit well-timed, whether fortunate or perhaps a combination of all of the above, but still, you're right, not a bad scoop here. Looking at the chart on ITB, picking it up right kind of in the middle of the down portion of that trough, so not a bad time to be scooping some ITB here, and obviously thinking the near term is going to look pretty good, keeping it out to SEP, not rolling it out to Dece or Jan or March or something like that. So clearly focused on an additional near term pop. One we'll have to keep an eye on here, listeners. See if he can keep the streak alive. Meanwhile, we're going to keep on rolling right on into our next segment. It is time once again for the Viceroy Block, aka the Xpress Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, yes, it's time once again for the Express Block. This is the portion of the show where the Viceroy, when he's not busy donning his best set of Gordon Gekko suspenders, takes us deep behind the scenes into the land known as Options Express by Charles Schwab. Mr. Viceroy, what caught your eye today, sir?
Well, a couple things. We talked about the big move in Priceline and the move in Tesla. And it looked like kind of a risk-on money going back into momentum trades. Kudos to Andrew for his call on Thursday for the Friday market. But that's clearly what we saw the last couple of days was money coming back in and money going back into a handful of the momentum names. I look at my screen where I keep probably what I'd call a couple dozen momentum names up, kind of everything from Apple and Amazon all the way down to the Regenerons. And I'm doing that from an alpha standpoint, an alphabetical standpoint. And all of them seem to have pretty okay days today. Not saying all of them were up, but there was clearly a risk on coming back in today. I do want to touch on a couple OX and Schwab events going on. And I know I've talked about this a bit, but for the Schwab customers who've been waiting to get the OX trade ticket, the 3 and 4 leg trade ticket, that looks like it will release, as we've mentioned a couple times on the show, will release early to mid-September. So Schwab customers who've been waiting to get that 3 and 4 leg trade ticket. The other thing I want to talk about, the other resource I want to talk about is my perennial favorite, the IdeaHub. We're looking at premium harvesting today, and premium harvesting both on the security side and on the futures side. Midday had 152 liquid ideas. So premium harvesting looks for credit put spreads, credit call spreads on a quantitative basis. It looks for half standard deviation, full standard deviation out of the money. But 152 credit spreads as of midday. If you're looking for ideas, if you are a premium seller and you're looking for risk managed ideas, IdeaHub continues to be the only quantitative spread finder on the brokerage side of the business. And on the security side, on the OX side, it's the only quantitative iron condor finder, and we're adding 8 names to it, hopefully by the middle of the fourth quarter, but we'll be adding 8 more names. The names that are in there are the ones where the SIBO calculates a volatility metric on them. So I know everybody's familiar with the VIX, but also keep in mind the SIBO calculates a VIX on the Russell, a VIX on the Qs. They calculated a VIX on Apple, Amazon, Google, Goldman Sachs, IBM, and many of the ETFs, the gold, the silver. We're adding 8 names there. So a more target-rich environment coming in the next couple months. And that's what's going on at OX.
I love it. Someday we'll have to look at a breakdown of the IdeaHub activity to find the lone premium buyer out there amidst the sea of credit spread premium harvesters. I know a lot of the OX clientele who like to use that tend to lean towards the dark side, and it's all good stuff. It's all risk mitigated. I just find it's funny. I don't mind highlighting the 1 or 2 guys who are out there saying, "Hey, I want to buy some juice." You know, the Andrew Giovanazzis who are floating around out there. He would have a hard time, I think, on the IdeaHub.
That's, you know what? That's coming in early 2015. There'll be a debit spread side to it. So we're going to try to be all things to all people.
Egalitarian. I would love to see when that launches the breakdown of that. I have a feeling I know which way it's going to go, but I would love to see it in the raw numbers. I think that'll be a fascinating expose into the mind of the retail options trader. Good stuff. As always, Mr. Viceroy. And now it's time for us to keep on rolling. The show is a beast that cannot be derailed, listeners. Yes, it's time for our next segment. It's time for the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, listeners, you know what time it is. This is the portion of the show where Uncle Mike Tusaw comes on down from the mountains, indeed, the high peaks of St. Charles, Illinois, to dispense some options, wit, and or wisdom. His smoking jacket and bubble pipe and stone tablets firmly in hand. Uncle Mike, I'm glad the Skype gods are smiling on you out there in St. Charles, Illinois. We're able to get you back on after all those tech snafus over the past week. So what strategery, what wisdom do you have to impart to us today, good sir?
Well, it's about happiness and finding your happy spot as a trader. I want to give you a couple of examples today in terms of the most non-moving security that I could think of off the top of my head. And then the opposite end of the spectrum, well, what the heck? They just had earnings. We'll go with Priceline. There's 2 ways with which there's 2 extremes in terms of looking for premium to sell or premium to buy, whatever the case may be. And like I said, there's no scientific notation for this except it's just off the top of my head. But let's look at something very exciting that theoretically would have high premium, and that would be Priceline. With that, you can sell premium fairly far out, and then so long as Priceline doesn't have that big of a move, then you'll be okay, whether you're selling a call or selling a put. Now, of course, the disadvantage to something like that is that if you're selling premium that far out, a lot of times Priceline does have that big of a move, and you need to be prepared for it. Now, on the other extreme, there's a security that, well, quite frankly, it really doesn't trade a lot of options on it, but I was trying to think of the most non-moving thing that I could think of off the top of my head, and I came up with SHY. It's the ETF that tracks the 1 to 3 year treasuries. It has a range so far in 2013 of between around 84.30, I believe, and a high of $84.68. So it's really not a big mover and shaker. That would be the opposite extreme. And then the concept behind that, granted, the options are so illiquid, I don't think I would trade them ever anyway. But the concept is that, okay, this thing never moves, so I can rest easy when I sell my out-of-the-money premium or at-the-money premium, whatever the case may be. But the problem is that there's not that much premium there to sell. So with that in mind, and this could hold true to you whether you're a premium seller or a premium buyer, what do you lean more towards as a trader? Let's just assume you're a premium seller for a moment. If you're a premium seller, are you fine selling far out of the money premium against something like Priceline and then just basically getting paid to sweat for 2 weeks or 1 week or 2 months or whatever time frame you choose? Or do you like selling at the money premium on something like Priceline and wanting to adjust quite frequently because of the movement that actually happens on it? Or are you fine getting next to nothing for your premium on something like SHY? Once again, I wouldn't actually trade SHY. Maybe I would look to do something on the futures option side of it if you really want to get to that boring of the spectrum, and you're fine just not getting paid that much. What I like to do personally, I like to be somewhere in the middle. So often my personal choice of trade is usually along the lines of the indices, as we have talked about on this show a lot. Whether I'm being a premium seller, a premium buyer, a spread trader, whatever the case may be, I know the things with which I take comfort in, what I'm used to, what I'm have done for many years, and that's what I like to trade. With Andrew, oftentimes with him and Mr. Seabass, they'll often talk about trading on the VIX or doing trades along those lines. So what I would encourage you to do today is determine what level of comfort you have with being a premium seller or a premium buyer for that matter, and decide what type of stock, what type of ETF, what type of security in general you feel comfortable using, because of the fact that if you just go out there and look for something and think, oh, the stock has to move this much, and as long as it doesn't move this much, whether it's 4%, 8%, 12%, 25%, then I'm okay. Well, you need to look at the full picture of it, because if out-of-the-money premium is priced fairly high and it looks very tempting, that's probably priced that way for a reason. And sometimes you can do well doing that, but if it's not your game, for me personally, Priceline would not be a good stock for me to trade anything on unless I'm doing some type of dynamic collar of some sort with which I don't even know about yet. But on the flip side, SHY would also, or 1 to 3 year futures options would also not be a good stock for me, or a good trade choice for me. I need to be somewhere in the middle. So with that, in terms of the strategery of the day, determine your level of comfort, determine your strategies, and make sure that what you are trading matches the personality with which you are trading it with.
All right, Uncle Mike, and I'll have you know before you besmirch a fine name like Shy that it does average a whopping 19 contracts a day, even though today it's a little bit south of that at 0. But still, it's very active, very liquid, highly fun to trade name. So don't you besmirch, sir, a quality name like Shy.
My apologies for besmirching. I do not take umbrage.
If there were a name that ever earned its ticker symbol, this is the one. This is a fantastic ticker for this. All right, great stuff. And now we're going to keep on rolling right on into a lot of our listeners' favorite portion of the show, because it's when they get to be featured on the old program. Yes, it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, listeners, and today's listener queue comes in actually from the old OX community there, where a lot of clients are always surfing, seeing a lot of cool questions, interesting stuff, sending them over the Viceroy's way as well as the way of the trading desk over there. And every once in a while, they make their way over to us here on the old Mail Block. And today's one is an interesting one. I wanted to kind of discuss it because we actually have a few minutes here, which is a good time frame. You can't really do this in 2 seconds. And this is the question that kind of shakes out along the lines of, let me see if I can pull it up here. Oh, yes, with all the rumors coming out these days and a lot of talk, and he's certainly been surfacing and in the public eye quite a bit. He was on our network not that long ago. We're talking about Blair Hull, the very well-known founder of Hull Trading, a pioneer in the electronic trading space. From an options perspective, of course, has the history with the blackjack and all that other fun and colorful stuff, selling his firm out to Goldman for $500 million back in the early wave of market-making firms, turning around and selling to big banks when big banks discovered, hey, there's gold in them, there are options hills. And so he was on the early cusp of that wave. A lot of people are kind of wondering what's going on with his upcoming ETF. His rumors is going to be a quant ETF, some sort of options overlay ETF, an actively managed options ETF, which if you know the ETF landscape, there's kind of a dearth of those products out there, not really a lot of offerings in that space. And so a lot of people are wondering what's up with that and whether it will really have a big impact on what a lot of us are trading these days and what a lot of the retail clientele are out there trading on OX and platforms like OX as well. Now, Alex, I know you're pretty clued into the rumor mill in the option space. You know, I've been paying attention to this, but I haven't really heard a lot of concrete updates about what exactly they're up to over there. Have you heard any more recent information you want to pass along to our listeners here?
So this is a question that comes up a lot, and I'd actually also like to hear Mike and Andrew's view of this, because I know, Mike, I don't know if I'm telling tales out of school here, but I know at one point RCM was talking about bringing an actively managed option ETF. So Blair filed a year ago for the whole tactical allocation actively managed ETF. And there wasn't a lot of open kimono in the sense that he didn't really talk about his strategy. But if you look at the history of Hull, what they were good at was using implied vol to interpret the tea leaves. I don't want to say read the tea leaves, because I don't think anybody has hit that silver bullet yet. The ETF hasn't come yet, and actively managed ETFs are dynamically managed ETFs using options. There have been multiple filings. There aren't a lot of products yet that have traction. There were some early ETFs that were just covered rights. There's a lot of stuff linked to the BXM, the SIBO buy right. But getting a quant like Blair into the marketplace, I think could change the landscape. Now, again, I'm speculating because haven't seen the strategy yet and don't know if it will get traction. But I will make one interesting comment. This is sort of I hope this isn't taken as a catty comment, but one of the most fascinating things in reading the filing, they profile all the senior management of the ETF firm and of Ketchum Trading, which is Blair Hull's ETF vehicle. And the thing they look at is what else do these people do? And the comment under Blair, and this is a public filing, so anybody can see this. It says manages his other $350 million. Now, the reason I point that out is not to focus on how well Blair did, but I always tell the story about, Kenny Griffith started in his dorm room trading options versus convertibles. Hull was a card counter and then sold theoretical value sheets to traders on the floor of the Pacific Exchange. Everybody says, I'm starting out, I got $5,000. Do I really have a chance? And the answer is, yeah, in this marketplace all the time. But Mike and Andrew, I'd like to hear what you think about actively managed ETFs. Mike, are you guys still thinking of doing one?
Yeah, just at this point in time, we have our strategic night fund that people can invest in. And so it's kind of like an ETF, but it's not really an ETF, if that makes any sense. And that if you wanted to invest with us, we would trade it as we're an ETF, but in that we block trade it. And so the second stage of that, of what we're looking to do with that, is we're adding the hedged strategic night. And that actually just went live a couple weeks ago. And so what that is basically is that we have a basket of stocks with which we like. And with that basket of stocks, we'll use SPY as a hedging mechanism. Other gentlemen in the office are responsible for picking the stocks. It's my responsibility for doing the hedging. And it's kind of a work in progress, too, in that in terms of the ETF, the fund itself of what we're doing, we're up and running. We're doing really well with it. We're very happy with how it's going. But what we've kind of decided to do is that we want to grow slowly, meaning with trying to start up an ETF and get tickered, so to speak. That's how we refer to it around our office. Whether it's through an ETF or a mutual fund, there's a lot that goes into that. And in terms of filling out paperwork and being legal eagles, it's not our area of expertise. We're more in we're traders and investors at RCM. And so what we're doing is we're continually getting more and more assets under management. And then at some point in time, we're going to do is make this into an ETF or a mutual fund, more likely an ETF from what I'm seeing. But there's a lot to it in terms of doing it. And but it's still in the works. We still hope to have it done someday. But for now, we're just trying to focus on getting rates of return for people.
Yeah, we as far as ETFs, we work with a couple of people that do some managed ETFs. Us ourselves, no, we don't. We do have something we're looking at, though, but it's not an ETF product. You know, it's one of those things where there seems to be like a lot of these things floating around. You know, if they're really worth the time and energy for kind of a home run, it's sort of a tough racket since there's so many of them come out all the time. So for us, no. Could there be an option ETF? I guess maybe. I'm not quite. There's a lot of slippage and things like that in all those products. So it's I don't know. It's not something that I'm hugely interested in doing. But so that's not really, I guess, this short answer is not something we're focused on.
All right, interesting stuff as always. You guys over there in the OX community, shoot your questions, your comments over there to the Viceroy. We'd love to have them on the show here as well. Good stuff as always. But now it's time for us to keep on rolling out of the land of actively managed options, ETFs, and into the Around the Block segment.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. This is, of course, a portion of the show where we dive into what we're watching, what we're keeping an eye on for the rest of this trading week. Earnings season kind of winding down a bit. There still are a few names lurking on the horizon. Most of the big names have already reported. That just said, I said at the top of the show, Cisco coming out. They are indeed on the 13th, so we'll keep an eye on those. Uncle Mike, cover your ears, sir. I know that's painful for you. Cisco hovering right around 25 and a quarter right now. A little bit of a rally on the day today, up about 1%. We'll see how that unfolds going on into earnings. We'll, of course, miss it on our next show. We can talk about it in hindsight if Uncle Mike is up for it. And Uncle Mike, since you have to endure all this Cisco talk, I'll let you go first, sir. What are you watching for the rest of this week?
Oh, the agony you put me through. 190 on SPY and 1900 on SPX. I mean, we don't have a ton of stuff coming out in the coming days and weeks, but right now my long strike price on my protective puts for SPY is the 190 level. And like I said before, if we go below that level, I'll probably be pulling the plug on some things and waiting to get back in, so to speak. But for now, just watching that level and just kind of curious to see if we have had our pullback or had the correction that everyone talks about, this 4% correction or whatever we have had from the highs, and just excited about seeing what's going to be going on coming into the fall.
Mr. Viceroy, what's catching your eye this week, sir?
240 on the U.S. 10-year and 1 on the German 10-year. I think much of the conversation this weekend on the business shows was our 10-year bouncing off the 240, and I think it traded down into the 238 level. I think rates could go lower. I thought that for a while, and I'm not sure that bodes badly for the market. And then we're watching Putin, and we'll see how nuts he really is.
How nuts can he get? How low can he go? All right, take us home, Mr. Andrew, Mr. Rock Lobster. What are you watching for the rest of this week, sir?
Hey, I am watching, actually, mostly it's the geopolitical stuff because there's not a lot of economic news coming out. We've got a whole, month or so now to wait for non-farm payrolls and things like that. Earnings, I think, were overall very good. Top line revenue grew a lot. Like, all that stuff is good. All the the U.S. economy works until somebody does something stupid and tries to break it. We can debate about who, how, and what that is, but in general, the country's worked pretty well for the last 300 years, even before it was a country. So if you just leave it alone, kind of grows. And that's what's happening again. The biggest, I think the big volatility generators are still overseas. To the extent that those things calm down, the better it's going to be. I'm watching treasuries tick down a little bit today. Gold tick down just a little bit. Not enough, I would say, to blow the all clear sign, though. So, but every day you don't hear news, you'll probably see volatility tick down a little bit. And I would expect, stocks to kind of slowly go higher. So I think that's the environment we're in. But until some of this starts to improve, there is that outside chance. We haven't had this in a while, but like 97, 98 type of environment where the market was looking really good. We had all those very strong forces in the U.S., the internet growth and all that kind of stuff, that just the internet.com thing was really just kind of getting going. And then we had that, Russian crisis, and then it was followed by the Asian currency crisis, basically liquidity problems. And usually that's what happens when the market falls apart, is when there's short-term liquidity problems and everybody freaks out. 2008 was just a gigantic short-term liquidity problem. There was money everywhere, just nobody wanted to deploy it anywhere. So that's where I'm kind of looking around the corner to see where that might happen next. Right now, it doesn't look like it's going to come from the business sector because, they've been just basically stockpiling cash and not hiring anybody. So, the big problem area is potentially government, but at least the government looks like spending's going down. So, the things that are driving the market lower, and the reason why vol has gotten so lower, is there has been less, that perception of problem has been less and less and less. So I think if, we could have some a little aggressive foreign policy, we could see higher stock prices again. But I think we're still going to have, we're still going to chop around based on that. And that could be 1 to 2, 3%, whatever. But depending on how nervous everybody gets.
All right, good stuff, Mr. Rock Lobster. We'll have to leave it there, though, because that's all the time we have for this episode of the Option Block. And indeed, as we are wont to do every episode before we close up for good, let me check in with each of my cohorts here, see what they're cooking that may interest you, the listener. Starting off with you, Uncle Mike Tusaw, what's cooking in the land of RCM?
Well, just still continuing to go through a lot of our new clients that we've brought in from the Getting There promotion that we did on this show a couple weeks ago. For now, just check out our website, see what we have to offer at www.rcmwealthadvisors.com. And also what's coming in the near term on September 7th, the Buffalo Bills are going to beat the Chicago Bears on opening day.
Uh-oh, sir. That might be heresy if you say that around these parts too loudly. Good thing you're way out there.
I will say it loud.
You're
In
nestled.
our September 11th show, I'm wearing Buffalo Bill gear, assuming they win.
Good thing you're nestled safely in the hinterlands of St. Charles, lest the people here in downtown Chicago get up in arms at you, sir. Let's move along very quickly for his own safety and move on to the Rock Lobster. Mr. Andrew is coming down the pike over there at the pit.
We are having our boot camp. It starts Wednesday. It's a great deal. Go to optionpit.com. We're actually we had 200 spaces originally, and we are almost full, which it's been our best been our best event ever, and it teaches you all the basics. Like I said, if you want to go to use something like IdeaHub, if you want to go actually talk to Mike Tusaw and know what the heck he's talking about when he's managing your money, do something like take a class like ours. It's 6 hours of live instruction online. You get to keep the recordings and the materials, and understand how this darn option market works, how volatility works, and how it could actually help you, manage risk in an investment portfolio, which is kind of what options are meant to do in the first place.
All right, and Mr. Viceroy, last but not least, what's coming down the pike over there in the land of Options Express by Charles Schwab?
Showcase a couple things. Jimmy Ruzan did a live event this Saturday in San Francisco to a packed house. Next live event, Saturday, the 23rd of August in Seattle. Can't make it out. It will be simulcast. Wednesday this week, Nina's going to do advanced order features and walk limit. Next week, I'll showcase one. Jim Wyckoff from the Wyckoff Letter is going to do his monthly futures outlook. And while we're on the topic of the Buffalo Bills, the cover story of the Chicago Tribune is the Bills were almost bought by a very prominent Chicago family, but they passed on it today. So, Mike, if you can put together a group, apparently they're for sale.
Yeah, I'm hoping Jim Kelly ends up getting it.
Yeah,
he's someone that's interested. I hope if he can get a group together, he's someone that I'm hoping get it. So yeah, my family turned it down today. We just didn't want it, but yeah, I'm hoping for Jim Kelly to get it.
All you have to do is sell one of those hotels.
Yeah, there we go.
All right, good stuff as always. And on behalf of the Viceroy and Uncle Mike and the Rock Lobster and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show and for sending in such great questions. Keep them coming. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.